Hi everyone. Today markets continued this down selling as we expected. We said it all weekend. Friday was a big sell, Monday was a big sell, and so far this continues to sell. We broke a level here, but let's take a look at all of the charts and see if we can find some direction for the next couple days. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. In news worth mentioning, Trump says the tariffs on Canada and Mexico will go forward. These were paused for 30 days, but now it seems like they are going to go forward. And I guess that 30 days is already up next week. It feels like we were just talking about this when they were first implemented, but I guess that 30 days is up, and right now they have not met the requirements that the United States wants to see, at least what President Trump wants to see. And the US has quote unquote been taken advantage of on just about everything, and now we are going to start reciprocating those tariffs across the world, and it'll be interesting to see how these countries react. Certainly the stock market won't like it, but ultimately down the road maybe it'll be better. Of course, that's not what we trade. We trade the short term, and in the short term that is not so great for us. And then looking at fear and greed, we're down to a 29 from a 35 already, almost into extreme fear so quickly. Extreme fear on momentum, extreme fear on strength. Breadth not quite there yet, but it is deteriorating pretty slowly. Put call ratio spiking up to 0.69. This can go a long way, right? We can see this get all the way into the 0.9 area. We saw a 0.99 back here in April, but right now we're in fear, but not at a very high level yet. Volatility continues to spike higher. We'll look at that later. Safe haven demand cratering. Bonds are doing well. Equities not so much, and then junk bonds same here. The gap between junk bonds and investment grade bonds seems to be widening a little bit, so a little bit of fear in that market. Moving over to earnings here just for a moment, you can see Realty Income missed on the bottom line. Interesting there. No number on the top line. Curious what's going on with them. I do like that company. Domino's Pizza missing on the top and bottom lines by a little bit. I'll definitely take a look at them. I'm not sure I'll do it in this video, but and then for tomorrow we have Home Depot, Intuit, American Tower. Fairly interesting. Caesars is in there, and then don't forget Wednesday after hours is the big one. NVDA, Salesforce, TJ Maxx, Lowe's, eBay coming in, First Energy in there as well, Dollar Tree. Definitely going to be an eventful day. Want to see how NVIDIA is doing. If they do poorly, that's going to be terrible for markets. Then looking at the economic calendar, you can see that tier note auction came in at 2.169, a little bit higher than I would have guessed. I think this is going to be closer to the 3.75 area in the not too distant future, but at least for now, this is where it's at. And then for tomorrow, 5-year note auction, consumer confidence. This has been fading a little bit. Want to see how that's doing. And then for the Wednesday, just new home sales, nothing big. 7-year note auction, want to see that come down a little bit, but overall, nothing huge. Moving over to Max Pain. Max Pain is quite a bit higher from here over the next 11 days out to 14 days. Interesting, down 4.5% at 570. We'll see if that has any bearing on where we're at, but in the short term, you can see a little bit bullish on the Max Pain. That hasn't mattered over the last couple days, but I do think this will matter at some point. We could see like a 1.6% move to the upside. Then I would expect that to get rejected. We'll see if it makes sense on the charts. Moving over to the charts, looking at the S&Ps, you can see it was down about 0.5%. Momentum bearish, RSI bearish. Volume did slow down just a little bit, but we broke this trend line here. So the next trend is all the way down in the 588 area. Is it going to go straight through here? I don't think so. My guess is we'll see something more like this, where you have a consolidation, big breakdown candle, follow through candle, maybe a little bit of a retracement. Will it be this aggressive? I don't know. That seems a little too aggressive, but you never know. If we can get back above the trend, that would be a good start. That trend for tomorrow is going to be 599.76. So far, we continue to see that bearishness. And throwing the levels on there and looking at the hourly chart, you can see we gapped right to the level, 603.25, could not get above it. Clear sell early in the session, sold off right below that next level, 599.64, which again makes sense. Come up here, retrace, touch that trend. If it rejects from there again, my next level to the downside is 591.09. We've talked about this before. 595.50 or so makes sense as a potential level, but I think it's going to cut through there. I think we're going to come down at least to 591, maybe hit this trend area in here, 588.50 or so, somewhere in there. And then I would expect to see at least a little bit of a retracement, some kind of a relief bounce. But for now, 3 days in a row of bearish. It did slow down a little bit, but still looks bearish in terms of level breaks for me. Then moving over to the Tasty charts here on the 4-hour, I just wanted to highlight just how extended we are. You can see that lowest ATR band right now is 599.07. That's the zone we think we're probably going to get back to, at least on the retracement. Still holding the 8 EMA as resistance. We came up, tested that level, sold off from there. If it comes back to it, that's 601.12 right now. Obviously, that'll continue to step down, and then you can see volume coming through on the selling candle. So everything says this should continue a little bit lower, but in the short term, it is definitely extended well below all the ATR bands. Moving over to the NASDAQ, even worse, 1.18% to the downside. Absolutely terrible. $6.21 on the day. You can see we came above the level just briefly, 526.50. I followed my rules and I did try to trade it long off of that support. Then it broke and I got short and I held it pretty much until the lows there, and I was able to make a little bit of money. I held almost to the close, almost overnight, but I did end up deciding to take it off right at the end of the session here because we're at a support level, 519.48. If it cuts through there, 514.92 is my next level, so we'll see if it can go. Right now, it is at an area of support. It's bouncing just a little bit after hours, and you can see that here on the hourly chart. Tried to go a little higher, hit the trends, broke the level here, continued lower, had a trade in here, took some profits, traded it long just a little bit in here, and then I did add to my short position and followed it into the close, and then like I said, I took it off in here, so honestly, really good trading. Did pretty much everything I wanted it to except for the long trade that I tried to do here at that 526.50 level. Cut right through there, got stopped out on those positions. Everything else was good though. Again, support right here, 519.50. Next one, 514.92. If it holds support, you're looking for 526.50 as your upper level. And then moving over to the Tasty charts again, super extended. That lowest ATR band is 523.38. So well below it by about 0.5%, expecting this to either pull back into the zone, sideways consolidation, or just extended. You can see here we were extended, we pulled back into the zone and then sold. Does it pull back again to that 8 EMA at 525.71 and then sell a little bit more? Certainly a possibility. You can see here last time we sold super extended below the bands, we ended up pulling back into that mid-range. So watching for that potential, but of course everything right now says lower lows and lower lows. So you got a low here, lower low, lower low. Until we see that structure break, everything still says bearish. Moving over to the Russell and the Dow. The Russell was kind of in between at a 0.72 to the downside. The Dow actually managed to stay positive, which was crazy. 0.09 to the upside on the day. It's falling just a smidgen after hours, but looking back here at the Russell, again, I almost took this trade in here at 218.13. I did not take this position because the Russell did look a little bit weaker early in the session. And you can see it here, broke through immediately, came back, retested, continuation lower. So I was actually watching it right here, if we could get above it and hold and get a continuation, but it didn't work out that way. So I wasn't watching it here, did not take the trade, and then it ended up selling a little bit more here. But looking at it on the hourly chart, it does look interesting because you have a low, slightly higher low here. Got a support 214.79. I would expect it to come in and retest this double bottom potentially. Of course, everything structurally still looks bearish, so definitely be cautious if you're trying to take that kind of a move, but understand that the Russell did sell almost 3% on the Friday, so huge sell there. No big surprise that we did get a little bit of a slowdown on the Monday session. Monday's usually lower volume, and that's what we got. The other piece here is that we are below all the EMAs and SMAs on the Russell daily chart, so that's also a bearish signal. And then looking at the Dow here for a second, really no changes, still watching 432.78 as a zone of support. As long as it holds, you can stay bullish. If it breaks down, then you're looking for support at the 426.20 level. Moving over to the Mag 7. Mag 7 continued to sell 1.53%, more than all of the indices here. Cut through that 315.04 level. Next one is 305.25. Falling after hours. We're going to see if this can go another 1.7, 1.8%, somewhere in there before we find support. The trend is a little bit lower than that. You got the trend at about 3% lower. Of course, we have NVDA earnings this week. That's going to be interesting. Can that save markets? It's not impossible, but right now, momentum and RSI, everything looks a little bit bearish. I did want to bring up the weekly chart here just for a moment. We talked about it on the weekend video. When we go over those weekly charts, you can see the 21 EMA on that weekly chart was at 309.29. We touched that level and found a little bit of support, so we'll see if that is going to hold up here. Of course, everything still looks bearish, but you do have a bit of support. That's also the consolidation low here back from end of December, early January. Moving over to Apple and Microsoft. Apple managed to stay positive as well, 0.63 to the upside. Couldn't get above the high from the Friday. We threw a wick to that level, but stayed positive on the day. After hours, it's up about 60 cents. So Apple doing really, really well compared to everything else. Momentum still fading, but RSI looks bullish. And then looking at Microsoft, down 1%, continuing to look for that tag of the 394.22 level. On a closing basis, we held the low from 12 February, but obviously on the wick, we made a much lower low that was at 399.42. So we touched that big psychological level, probably got a little bit of a bounce off of that, but still expecting this to go lower to that next level. Moving over to Tesla and NVIDIA. Tesla on the weekly chart. The low of the week so far was 324.70, came up just short of the level 324.47, and then you can see we're right on that trend here on that weekly chart. Throwing up the daily, you can see it a little bit better there, right at the trend. After hours, it's a little bit below it. Still looks pretty terrible. This is a double touch of the trend. If it cuts through here, it's probably going to go significantly lower. The next target for me would be the 144 EMA at 305.80. And then looking at NVIDIA, big down move there, 3% lower right to the level. 130.35 is the level. After hours, we're bouncing a little bit from there. Momentum bearish, RSI bearish. I think this is going to go a little bit lower, looking for at least the 200 at 126.02, my level 124.69. We'll see if it can cut through this zone or not. The selling into earnings is not a great omen. This has been consolidating / downtrending for a bit. And honestly, I just think this is super priced to perfection. In my opinion, I'm just not sure NVIDIA can deliver earnings that can make this more expensive. Moving over to Meta and Broadcom. Meta sold off 2.27%. This is finally downtrending here a little bit. That is 5 days in a row of bearish after like 20 in a row of bullish. Momentum, bearish, RSI, bearish. Broke the trend here on a closing basis, so it looks like we're heading for that 55 EMA at 644.48. Be interesting to see if we hold that level or not. Below that, you got 602.95. I don't think it's going to go quite that far. If it round trips this move, that's going to be pretty crazy in my opinion, but otherwise, looking at Broadcom down nearly 5%, big sell. This is an accelerating sell, absolutely not what you want to see. Probably going to test this zone here, at least between the 196 to the 199 area, somewhere in here. Test these lows back from the end of January. You got a high, lower high, big sell, acceleration, momentum bearish, volume ramping. Everything says this should go a little bit lower. If this zone here breaks around that 198 area, then you got the 144 EMA sitting there at 187.02. Moving over to staples and discretionaries, you got staples continuing to go higher seemingly every day, and discretionaries selling off once again. So we're through the trend now. Everything says continuing to be bullish. We hit a level 182.53. Touch that level, pulled back, closed below it. We're pulling back to it after hours. Think this is going to go to 183.43. This is the place to be right now. Staples continue to go higher. And discretionaries, high, lower high, continues to sell. It took a long time to do it, but we took out this low here. Think we're headed at least to 215. You got the trend here to 12.89. Almost oversold, but not quite. I think it has a little bit more to the downside. Moving over to other sectors here just for a moment, I want to highlight real estate still doing well, up about 0.5%. It's still just below my 42.84 level. You can see this pattern kind of follows the bond pattern. I would say this is just a little bit expensive here. I did take another little nibble on real estate, but we're getting to the upper ranges of where this is expensive for me. And then you can see financials actually managed to stay positive. Don't love this chart at all. You can see high, double top, sell here. We're right at the lows of this kind of consolidation. So the chart doesn't look good at all. But in terms of relative strength, it did show some relative strength today, being up almost 0.5%. Moving over to breadth. Shockingly, breadth continues to hold up really, really well despite the fact that markets continue to sell here. Obviously, we got a big sell on the Friday, but for the Monday, we held up slightly positive on market breadth, still at the level 52.81 here. For the 50-day, closed above it, 53.28, and then you can see 20-day still in the same kind of consolidation range. The chart doesn't look great. We broke the 21, couldn't retest it, sold off a little bit. So structurally, this is still bearish, but in the short term, it's holding up at least for now. Moving over to the dollar. Dollar dipped a little bit lower, had a slightly lower low there, but then we were back into the consolidation. So for now, that looks bullish for me, right? So we took out the low, immediately rejected back into the consolidation range. I would be looking for a breakout here. Everything looks good. You even got a 21 retest there on the 12 o'clock candle, bounced immediately from there. So dollar looks bullish. I'd be looking for this to break above the 106.8 level. We'll see if that can do it. If it does, that should be a little bit bearish for equities, but for now, the dollar looks pretty good. Moving over to bonds, still like bonds, still holding bonds, still buying a little bit of bonds here and there. Everything says this should continue to go. Yields sold off, bonds rallied. We're right at the highs from this most recent wick. We're back above the level. Got above it Friday, continued above it here today. Momentum bullish, our side bullish. Everything for me on bonds says continue to go bullish on bonds. Moving over to the VIX, you can see the VIX bounced up to that 20 level. The high of day was 2024. Almost touched the high here from 3 February. I still think this is going to go a little bit more momentum bullish, our side bullish. We've been saying it's bullish. We expected it to go higher here today. Did touch that initial resistance. Is it going to get to this trend? I still think that it will. Will it do it in a straight line? Maybe, maybe not, but this is where I think it's going, in that 24.5 range. Moving over to my accounts, you can see I managed to make a little bit of money. You like to see it, especially on a day where the NASDAQ was down. Everything was down, but I made a little bit of money, so good on me for that. Not a whole lot, but a little. In terms of positions, like I said, I took everything off. I was short NASDAQ into the close, decided to take it off just in case we bounced off of that support. We are super extended, so wouldn't shock me to see at least a little bit of a bounce. But for now, everything looks bearish. We are at support, so I am flat. Let me know down in the comment section what you think of Trump's move on the tariffs. What do you think the impacts will be to the markets? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.